morning, ladies and gentlemen. Mad love and respect for passing through to watching this video. If you are awake right now and you are watching this video, welcome to Traders Reality. Okay, so let's roll with it. Quick, fast. I don't want to keep you guys too long like my streams. So, what's been going on? Well, what's today? Today's the FOMC, guys. Now listen, the FOMC is a statement made by the Federal Reserve in relation to the US economy. But the impact it has across the world is massive, okay? Now listen, traders right now are trading the idea of what could be said, what will be said, and what they would like it to say. And then we're going to have the traders that step in to trade the information that gets released. Now, regardless of whatever is said now about the FOMC and what they could say is going to be different to what they actually say. And what I mean by that is traders are not patient, okay? Retail traders want action all the time. The suspense of the FOMC releasing information is going to create people to get their trigger fingers out and start placing trades and getting caught in marginal situations which are going to make them hold the trade up until the release of the information. And then once the information is released, you could end up seeing this chaotic price action happening in the chart. Do not be involved in these sort of scenarios if you are not a seasoned trader, okay? And even seasoned traders don't trade news. They skip the news. They wait until the news has been released. All you need to do, ladies and gentlemen, is this. Trade at least 30 minutes to an hour after the news has been absorbed, okay? Now, the reason I say this to you guys is because there are a lot of people new coming into trading and they're thinking that, oh, there's news plays, there's going to be some volatile movement, I'm going to catch it. But are you going to catch the right move? If you've made money up until this point right now, ladies and gentlemen, and you are new to the game of trading, exercise caution. Why? Let them make the move and then you will react to it afterwards, okay? Because the market maker is going to do a great job of whipping and whacking price in any direction that he feels. Why? Because he can legitimately verify and justify his behavior because it's a news play. Volatility is at its highest. What you want to do, ladies and gentlemen, is you want to capitalize on the idea that whatever they decide to say in the FOMC, if it creates Bitcoin's move to the upside, you want proof of that move, wait for the retrace back down, and if it's going to be continued, they will move back up. This is the pattern that we look for every single day, ladies and gentlemen, okay? You want the proof of the move, and I will keep repeating that as long as I'm still doing this stream, okay? Wait for the continued or wait for the confirmation that they mean business with a move higher. Even like moving to the downside as well. If they do spike price lower, wait for the proof of the move for it to come back up and then continue back down again. Because it's in this area here that they will test intention for traders to commit in different directions. So in other words, if they've trapped the traders to go short here, they'll sharply move price back out to hit their liquidation points, and then they will continue to resume their move to the downside, or they will then shoot back up again. So just wait until the news is released. Now, the great thing is I'm going to be trying to go live just before the release of the FOMC because we do like to see how price moves during that moment. And during that time, ladies and gentlemen, there's something else as well. There may be a muted reaction, all right? The FOMC minutes, okay, is a statement. Now, they'll probably hold a conference later on in regards to the minutes, but every single month they release this information and the market needs to react to it. Whatever is said about it prior to that information is irrelevant. It's until it gets released, that's when it's important, all right? Now, with that being said, ladies and gentlemen, let's just have a look at what happened in last night's live to understand what happened today. So here's last night's live. We were talking about when you come to the chart, mark off the zones in the chart where notable interest is present, okay? And you can see that we've got this zone right here. As you can see, if I just zoom in, so it's clearer for you, you can see this zone right here where they had the previous wick with the green vector zone, and it was a price structure where price in essence was going to test traders' sentiment. In other words, are they going to encourage more traders to go short from this point so the market maker can then release and make his longs at lower prices to bring price back up? That sort of happened last night in Asia. So if you look at price action, you can see that they came down and broke that structure. This is on the 5-minute time frame. So if we go into the 1-hour time frame, you can see bright as day what they have done. They have come and completely recovered that whole wick right there, ladies and gentlemen, and they came all the way down into this structure right here, didn't break it, but then they've sharply moved back up into the psychological ranges. All right, so where does that leave us now? Well, Bitcoin is still ranging. Okay, now this is going to be consistent with the FOMC play itself. So all I'm saying to you guys is just be mindful with today's price action. Bitcoin is stuck in this range, okay? And it hasn't gone anywhere. This right now is what you would call a balance in price. It's what you call a balance in the auction. All right, we haven't had an imbalance as per se to say, right, there is volatility. An imbalance would be if price was to move away from this range and a sharp move to the upside or a sharp move to the downside came into the charts. Okay, right now they're holding price in this area. Some might say, no, Tino, it's forming this pattern, it's doing this, it's doing that. Listen, it's not gone anywhere that it hasn't been in the last 48 to 72 hours. Okay. Look at these green sessions here. Green, 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 green. These are days, okay? So 1, 2, 3, 4, 5 at the weekend, 6 right there. So for the past week, it's been stuck in this range. So you don't need to do anything just yet. Wait until the FOMC comes out before you actually start coming back to the chart to try and exploit price action. Now, that doesn't mean that the scalpers in the channel can't exploit certain behavior, all right? Now, just look at it like this. All you're looking for is volatility. Now, if you're going to be scalping crypto, you've got the issue of fees, okay? Now, if you're going to trade simply, one of the strategies that we do talk about in the masterclass sessions for the Patreons is this. We talk about quick scalping strategies where when price deviates away from a moving average, you take that purpose, you take that trade purely on the presence of vector candles. So here's an example of one. Look at that. Price is coming down, comes back into this previous structure, breaks this one, tests this area here and holds, okay? Then you see a green vector candle. For a scalping perspective, I'm always going to be going long on a vector candle that breaks through the moving average and tries to close higher. That's my entry. This is my exit, okay? That's my exit in terms of my stop, which is always outside the structure that they came away from because they could actually come back down into that structure. I'm not going to set a stop here. Now, if I'm really, really making sure that I want to keep my risk to a minimum, I am basically saying in this area here that I'm going to go long and my long is going to go into a profit straight away. That's not the case. You've got to give Bitcoin or any asset that you're trading a chance to move. This here is a structure that they didn't break. So if you go long in a candlestick like this, you set your stop to be beyond the structure that it's actually come away from. Okay, because you're giving it a chance to come back down again to test into it to try and move out. If it actually continues down lower, then you'll know that you're in the wrong trade, cut your loss, get out. You don't have to wait for it to close below this point. You can close as it makes its way towards that point right there. So then again, you are maintaining capital preservation in the charts. Okay. So when you take advantage of a green vector candle like this, breaking above a moving average, in this instance, 3, okay, so you've got the 200 EMA, the 50 EMA, and of course the 5 and 13, which I like to join as 1. You see volatility in the chart. So they've made the move to the upside. They've come away from the 50 EMA. They retrace back down again, and then they finalize with another attempt towards the daily open. Okay, whenever the daily open is in sight, ladies and gentlemen, there's a good chance, a high probability that they're going to try and test it at that point, because that was the point of nominal interest that the market started off at. So when they start a daily open, ladies and gentlemen, there is a big psychological impact with the daily open, because when they trigger the daily open, so if price has been trading below, okay, and then you can see them making their way towards it, the same guys that favored higher prices at the daily open are probably going to be putting orders in that area there to try and see if price can continue higher from that point. There's also a point in that area where traders are at break even. So that's where they may actually try and close their trades or give a reason to believe that they need to hold it because the daily open is in sight and price is going to trade higher and Bitcoin's going to end up trading positive for the day. And this is where you see this drop, retrace back into the range, which forms an M formation, and then they drop back down again. Okay? But what I want you to try and understand is you can see how they move away from the moving averages. And in this instance, it's mainly the 200 EMA because price is close to the 50 EMA. To simply trade away from the 50 EMA and wait for it to come back into it, okay, you're going to get caught out because look, they traded away from the 50. That's not that much of a great move in relation to scalping crypto because they come straight back into the 50 itself. All right, you want to be careful because not all movement away from the 50 EMA is going to be a big move away from it. Okay, they can have little little deviations away from the 50 and come straight back into it as well. So be careful with that. Okay, now with that being said, ladies and gentlemen, looking on the higher time frames, I will reiterate it one more time for you. Okay, just be careful with FOMC. Okay, now Ethereum itself, of course, doing the same thing as Bitcoin. They've come all the way back down into this area here. We had marked this zone off last night in the charts. You can see that they've come back and recovered most of the green vector candles. Now, tomorrow is midweek reversal point. It's Thursday. So whatever it is they do today, they'll be setting up price for the midweek reversal. Now, the midweek reversal, depending on what is said today in the FOMC, in relation to dollar yen, okay, it's going to be reflected tomorrow. All right. In other words, if the FOMC comes out with something good for the US economy and they're going to be trying to resolve the issue of inflation, then naturally we are going to see dollar yen trying to make its way back up a little bit more. But we are expecting dollar yen to try and at least make a recovery back down at some point. You've already got Japan coming out saying that if dollar yen ends up becoming 130 per Japanese yen, then there's going to be a problem for the yen, a big problem. And in my opinion, okay, there's always been this dispute between Japan and the US in terms of trade, okay? So in essence, the US itself has got the winning hand with the dollar trading so aggressively to the upside. Okay, if you look at News Factory, you can see it. Look, Japan's central bank will be alarmed if the yen crosses 130 per US dollar, and that's the ex-vice minister. I was saying today that that is something rare. You don't really see them stepping up to the pad and talking about the situation. Okay, they're already talking about dollar yen being back into overbought zone. So if we are going to take the idea that this is now forming an M formation in the chart for dollar yen, okay, we are then naturally anticipating dollar yen to come down, which would be consistent with gold coming back up to the upside after they've been consolidating in this area and holding during the news plays that are coming out later today. Okay, they've been holding gold for quite some time. All right, so be mindful of that, ladies and gentlemen. Okay, cool. I just wanted to do this video just to really give you guys that warning. I will be going live today at 2 p.m. I'm going to try my hardest again to get on the live before the FOMC releases the news at 7 p.m. UK time. All right. So, ladies and gentlemen, if you are new to the channel, mad love and respect for passing through. Be sure to like and subscribe. And if you haven't done so already, get yourself into the Discord where the pattern watchers reside, where you can talk about the hybrid system and learn more about it from there. All right. So I will catch up with you guys later on. Have yourselves a great day, and I will see you guys at 2 p.m. GMT UK time. Take care of yourselves, family. Peace.